we have a very special guest with us this morning. We are talking about Warren Buffett. He's here with us, and he is here with us for the next 3 hours. We are very excited to be spending this time. We are here at the Nebraska Furniture Mart. And Warren, it's great to have you here. Thank you very much for joining us this morning.
I enjoy everything about it except the hour.
Except the hour, and we do appreciate your getting up extra early. We should point out it's 5 a.m. here in Omaha, so you are quite the trooper for coming out.
Thanks.
I know we've got the next 3 hours to spend with you, and in most instances, I might think 3 hours is an incredibly long time, but I have to tell you, given everything with the state of the economy right now, 3 hours may not be enough time. So, again, we appreciate your time with us today.
Thanks.
Warren, why don't we start off talking right away about the economy, because that's what people are wondering right now, what's happening with the economy. We hear all the time from people who are very concerned and, frankly, quite frightened about what's happening right now.
Yeah, well, when
Warren,
we talked in September...
Hold on.
Yep.
I'm sorry to break in. Merck and Shearing Plow are merging, Warren.
Whoa. All right. Merck and Shearing Plow merging. We thought we already had enough to talk about with you this morning, Warren, but why don't we start off with some news?
I would never presume to jump in like that on the Oracle, but I'm sorry. Board of Directors unanimously approving a definitive merger under which the companies will combine under the name Merck in a stock and cash transaction. Shearing Plow shareholders will receive 0.5767 shares of Merck and $10.50 in cash for each share of Shearing Plow. Each Merck share will obviously become a share of the combined company. Richard Clark, the chairman, president, and CEO of Merck, will lead the combined company. This is a real blockbuster, and right at 6 a.m. on a Monday. And I think you'd have to say, Warren, as far as animal spirits, this could be, This may not solve all of our problems, but it certainly is an endorsement of American business, and that M&A is alive and well.
Yeah, animal spirits are always there. The only question is who has the funds to kind of carry out the ideas that the animal spirits come up with. But particularly in pharma, they have good balance sheets generally, and they can make deals.
Are you surprised to see a deal of this size right now, though?
Well, I'm surprised at any deal of size now. Sure, that's true. It's very hard to make deals for companies in most industries.
Guys, Shearing Plow closed at $17.63, and at current values, this is $23.61 for Shearing Plow, for a total of $41.1 billion for this deal. I guess you'd also have to say that the whole Vioxx controversy, we can lay that to rest now for them to be feeling comfortable enough to acquire Shearing Plow for $41 billion. But This is a pleasant ride. And Warren, you're all over the place with you own foreign drug companies. You own stakes in foreign drug companies and in some domestic companies as well. It's always been one of your favorites.
But we don't own any Shearing, and that's why you see these tears coming down my face.
What about Merck? Do you own any Merck?
No, we don't own any Merck.
Not in your private account either?
No.
Okay.
What's your biggest hold? You do have some. I know you. What are your foreign drug companies that you have stakes in, Warren?
Sanofi, and the biggest one is Sanofi, Aventis, and we have J&J domestically.
Right. Okay. All right, Beck.
So. Well, we're going to talk more about this merger and what this means. I mean, do you expect to see other deals that would come as a result of this?
Well, every deal does tend to brew another deal. I mean, particularly with people in the industry. If Coca-Cola buys something, Pepsi thinks about something in the same arena. I've been in enough board meetings to hear that. There's a lot of. Every CEO has a little bit of that. All the other kids are doing it.
Right. We'll talk a lot more about this, but let's get back to the state of the economy in general as well. What do you see right now? You spooked a lot of people last week when you talked about how the economy was in tatters and would be there for quite some time.
Yeah, the economy, ever since we talked in September, we talked about it being an economic Pearl Harbor and how what was happening in the financial world would move over to the real world very quickly. It's fallen off a cliff, and not only has the economy slowed down a lot, people have really changed their behavior like nothing I've ever seen. luxury goods and that sort of thing have just sort of stopped, and that's why Walmart is doing well, and I won't name the ones that are doing poorly, but there's been a reset in people's minds, and we've seen that in something like Geico, where year after year after year we say you can save some money insuring with Geico, and year after year there's been a certain number of people that said, I've got this pal at the Rotary Joe and I'm insuring with him, and for $100, why should I shift? Every week we're just seeing it build and build. More and more people are calling. Our price differentials haven't widened. Our advertising isn't that much different. But the American public really has changed their buying habits. And on the reverse side, our jewelry stores just get killed in a period like this. And the high end gets hurt the most. Next down gets hurt the second most, and the lowest people get hurt the least.
What's happening? You told us a while ago. You told us that this was an economic Pearl Harbor about 6 months ago. But did this happen more quickly or more severely than even you expected?
It certainly happened close to the worst case. I mean, you never know what's going to happen. But I would not have thought there could have been a much worse case than what has happened. Although I will say this: the Fed did some things in September when it happened that were vital to keeping the place going. I mean, if they hadn't have insured money market accounts and in effect commercial paper, you and I would be meeting at McDonald's this morning.
Instead.
Yeah, right.
So why do you think that the consumers have gotten as frightened as they have? I mean, fear doesn't sound like too strong of a word.
No, they're scared, and fear is very contagious, I've never seen the consumer, or the Americans just generally more fearful than this, and they're also confused. And you can get fearful very quickly, but you don't get confident, in 5 minutes. You can get fearful in 5 minutes, but you won't get confident for some time. And government is going to play an enormous factor in how fast it comes back. And if you're confused and fearful, you don't get over being fearful till you aren't confused. I mean, the message has to be very, very clear as to what government will be doing. And I think we've had, and it's the nature of the political process somewhat, but we've had muddled messages, and the American public does not know. They feel they don't know what's going on, and their reaction then is to absolutely pull back.
So there have been a lot of fingers of blame that have pointed in a lot of different directions. But you're saying the message from Washington has been confused? Or?
Well, I think it's the nature of things. I mean, I think if people watch 535 members of Congress each give their view of what every player is doing and all of that sort of thing, and I think that you had a change of administrations, and you're dealing with things that people don't understand. I mean, when you first brought up the term sieve or something like that, or when you talk about credit default swaps, or when the public hears that, they think that something's wrong and they don't understand it.
And still, this is the worst case scenario from what you had imagined. What went wrong? Why did we wind up on that worst case scenario?
Well, we went wrong originally because we had a belief that and everybody had the belief. I had it, the government had it.